We learned a lot about fundamental analysis. We learned about income statement, balance sheet, ratio analysis, cash flow. We understood various ratios. In the last video, we talked about how to create the screeners. It is very much important to look at the fundamentals when you want to invest for the long term. Very much, very much, very much necessary, mandatory, compulsory. There is no option for that. But at the same point of time, I would also like to tell you that there are certain limitations of that, because of which we will also look at certain technical analysis. We will look at charts, we'll take help of indicators, and accordingly we will make a combination of fundamental as well as technical, and we will take our investment decisions. So in this particular video, we will be talking about certain limitations of fundamental analysis, which you must know, which you should know, and based on that, gradually we will jump on to the technical analysis. We'll look at the charts, we'll have a look at various indicators, and we will build a rock solid system combining fundamental as well as technicals, and I'm sure that will be very, very helpful to you. Hey, myself Amit Povert, qualification by chartered accountant, and you're watching this investing mastery series. Probably it's day number 21 or 22. If you have not gone through all the earlier parts, please go through that. Subscribe to my channel, and thank you so much. Let's get going. So, what are the limitations of fundamental analysis? Certain limitations that I want to discuss over here is, first, it is never real. So you need to understand that when when you're investing for the long term, I would recommend you that you should not be looking at the price on a single day basis. No need to look at it here. I would suggest you follow weekly chart, look at the weekly candle, and look at the price of your share only at the close of week, only at the end of week. See, please understand this thing. Why we are investing? Tell me in the comment box why you are watching this video, why you are watching this investing mastery series, and why you want to invest in stocks. What is your ultimate purpose? Please write down in the comment box. Please write down in the comment box. I'm waiting for you. Pause the video and write it down. Okay. Now you might say, Amit, I'm investing to make money. Okay, accepted. But why you want to make money? You might say, Amit, I'm investing to generate wealth. But why you want to generate wealth? I'm looking at something very deeper. Guys, you are investing so that you can enjoy your time and you can enjoy your freedom. You can say, Amit, I want to build wealth. No, why you want to build the wealth? Because few years down the line, if you got the wealth, when you are retired, you can enjoy your life. You can retire, you can retire peacefully, and still you can, make the most of your life. So ultimately, we want to invest to get a peaceful life. If you agree with me, just give me agree in the comment box. This is very, very important. And if you're investing to get a peaceful life, I am really sure you don't want to look at the price every single time, every single second, every single minute. That's why we don't invest. Hello, everybody, right? We don't invest for that. We invest to get the peace. So at the same point of time, when we are saying that you should not look at the price on a continuous basis, but here what I want to discuss is fundamental analysis are never real time in the sense that generally in Indian cases it is published quarterly. But even after the quarter is ended, generally financial account comes to the surface, except it's banking sector, a month or 1.5 months later. Like March ending financial results, generally we get somewhere around May or June. June quarter we get somewhere around end of July or August. That's how it has always been, right? Like when the financial year or a quarter gets ended, accounts team gets involved. They do all the transaction adjustments and all that year-end entries like depreciation and all that. Then auditor chips in, he audits and vouchers and all that, and then the financial accounts are getting published after AGM has been done. So it's never real time. Probably some event has happened in January, and you may be looking at that event in the month of May when prices already discounted that particular event. Please understand that. If a company has got a good order, say for example, company has got a good order, big order, bulk order, its sales revenue will get reflected at the end of the quarter, and the financial statement pertaining to end of that particular quarter will get after 1 or 1.5 months after the quarter is ended. So that is a big limitation, and that's why we should be looking at the technical analysis. We should be looking at the charts where the prices are so dynamic. It reflects very second moment if something is good is happening or something is happening. Like few years back when Yes Bank, I would not say scam, but Yes Bank fiasco happened. Its financial statement would have come much later, but the prices started falling. Okay, so it's never real time. It can be manipulated. That's what we have discussed even while we were discussing the ratio analysis. Statements, with due respect to all the companies, all the promoters, but the fact of the matter remains it can be manipulated, right? Sales can be inflated, things can go here around, your balance sheet can be inflated, and all the things can happen because your financial statements can be easily manipulated. I'm using the word easily and I mean it doesn't reflect market behavior. Like sometimes what happens is a company is performing good, a company is doing good, but market is not ready to give it the value. Like we discussed in the PE multiple. Some companies, maybe if you talk at the small cap, companies might be doing good, but there is no one buying it. And as an investor, you also got to be looking at that. If people are not buying it, its prices may not go up despite the company might be very, very good fundamentally. So this is something that you got to consider, that looking at the market behavior is very, very important. That will get reflected only when you look at the charts, only when you look at the real time prices. And accounting policies can be different. Like we discussed in the initial videos, some can be accrual system, some can be cash system. Apart from that, like one company may be following a depreciation rate of 15%, another company may be following a depreciation of another rate. Of course, this has been standardized with the implementation of Companies Act, and the government has been trying to streamline that so that financial statement remains comparable. But there are certain things where there are no policies. Like one company may be written off the account receivable older than 6 months. Like if money has not been received from an account receivable for 6 months, a company will write it off as a bad debt, while as other company might not be doing that. So there are going to be different accounting policies which will affect your analysis when you're comparing two companies from the same industry. This accounting policies difference are always going to be there, and it's going to remain. It cannot be sorted out, right? There are more limitations that we can discuss, but we don't want to get into the theories. We don't want to crack the accounting paper, or we don't want to become chartered accountants to understand all the limitations of financial accounting. As an investor, I thought this four are very relevant to you, and you should be aware about that. So that's what we try to discuss. And I would again like to reiterate the fact that having learned those limitations, if you got any negative feeling like, oh my God, Amit, we watched so many videos of yours, and we are not getting the now we're getting the feeling that we wasted our time and all that. It is not like that. Okay, it is for sure not like that. Fundamental analysis is very, very useful. It is must, it is compulsory, it is mandatory. But alone fundamental analysis will not make you a good investor. It can make you a good investor, but not a very good investor. And my job over here, why am I creating this series, why my channel exists, is because I want to take you class apart. And that's where we're going to combine fundamental with the technical. We'll blend this in a beautiful way. We'll create a wonderful investing system. And for sure, you're going to use that for the rest of your life. So hope you're loving this Investing Master series. Do let me know in the comment box what is your biggest learning from this video. How are you feeling learning this? I'll see you in the next video. Thank you so much.